Welcome to TechNation, where we talk about all things tech-related, including the wild world of cryptocurrency trading. Today, we're going to be diving deep into the mysterious realm of trading psychology, where emotions run high and fortunes are made and lost. So, buckle up and get ready to channel your inner Zen master, because we're going to teach you how to keep your cool when the markets get hot. It's time to take your trading game to the next level and achieve crypto success with the power of your mind. Let's go. When it comes to trading crypto, having a strong trading psychology can be the difference between success and failure. The crypto market is notoriously volatile, with prices fluctuating rapidly and unpredictably. This can create a lot of emotional stress and anxiety for traders, which can lead to irrational decision-making, impulsive trading, and ultimately, losses. By learning how to manage your emotions, stay disciplined, and maintain focus, you can become a more confident and profitable trader. Let's face it, trading can be an emotional rollercoaster. Whether you're feeling anxious, excited, or fearful, your emotions can have a significant impact on your trading decisions. When emotions are running high, it can be easy to make impulsive trades or deviate from your trading plan. On the other hand, if you're feeling overly cautious or risk-averse, you may miss out on profitable opportunities. Learning how to manage your emotions is a key part of mastering trading psychology. Your mindset can also play a significant role in your trading decisions. If you approach trading with a negative or defeatist attitude, it can become a self-fulfilling prophecy, leading to more losses and missed opportunities. On the other hand, if you approach trading with a positive and confident mindset, you'll be more likely to make rational decisions and take calculated risks. A strong mindset is essential for achieving long-term success in the crypto markets. Here's an example to illustrate how mindset can affect trading performance. Let's say you've just experienced a string of losses in your trading account, and you're feeling discouraged and defeated. You may be tempted to take more risks in order to recoup your losses, which can lead to even bigger losses. Or, you may become overly cautious and start missing out on profitable opportunities. On the other hand, if you approach those losses with a positive and resilient mindset, you'll be more likely to stay disciplined and stick to your trading plan, even in the face of adversity. This can help you avoid impulsive decisions and ultimately lead to more profitable trades. So, remember, crypto traders, mastering your emotions and mindset is an essential part of achieving success in the markets. When it comes to mastering trading psychology, mindfulness and meditation can be powerful tools. By practicing mindfulness, you can learn to stay present and focused in the moment, which can help you avoid impulsive trades and make more rational decisions. Meditation can also help you cultivate a sense of calm and inner peace, which can be essential for managing the stress and anxiety of trading. Visualization and positive affirmations are another powerful technique for mastering trading psychology. By visualizing your goals and imagining yourself achieving success in the markets, you can create a sense of confidence and motivation that can help you stay disciplined and focused. Positive affirmations can also be a powerful tool for cultivating a positive mindset, which can help you overcome self-doubt and achieve your goals. Journaling and self-reflection can be a powerful way to gain insights into your trading psychology and identify patterns of behavior that may be holding you back. By journaling about your emotions and experiences, you can gain a deeper understanding of your mindset and identify areas where you may need to make changes. Self-reflection can also help you stay accountable and motivated, as you work towards achieving your trading goals. So, how can you start implementing these techniques into your own trading practice? Well, for mindfulness and meditation, you can try setting aside a few minutes each day to practice deep breathing or guided meditation. For visualization and positive affirmations, try creating a vision board or repeating affirmations to yourself each day. And for journaling and self-reflection, try setting aside time each week to write down your thoughts and experiences in a trading journal. By incorporating these techniques into your routine, you can develop a more disciplined and focused trading psychology, and ultimately, achieve greater success in the markets. Good old fear and greed. These two emotions can have a profound impact on our trading decisions. Fear can cause us to panic and make impulsive decisions, while greed can cause us to take on too much risk and ignore warning signs. Both can lead to poor trading performance and ultimately, losses in the markets. But fear not, dear crypto traders, there are techniques you can use to manage these emotions and make more rational trading decisions. One technique is to set clear risk management rules, such as using stop-loss orders or limiting your exposure to any single asset. This can help you avoid taking on too much risk and prevent impulsive decision-making. For example, you can try deep breathing exercises or take a break from trading to clear your head and regain perspective. Let's say you're in the midst of a volatile market and you're starting to feel the pull of greed. You're tempted to take on more risk and hold onto a position longer than you should. This is where risk management rules can come in handy. Set a stop-loss order and stick to it, even if it means taking a small loss. By doing so, you're protecting your capital and avoiding a potentially larger loss if the market turns against you. On the other hand, let's say you're feeling fearful and anxious about a particular trade. You're worried about losing money and second-guessing your decisions. This is where mindfulness and self-awareness can be helpful. Take a step back, practice some deep breathing exercises or go for a walk to clear your head. Then, reevaluate your strategy and make a rational decision based on the facts at hand, rather than letting fear guide your actions. In the fast-paced world of crypto trading, it's easy to get caught up in the excitement of the moment and make impulsive decisions. That's why having a well-thought-out trading plan is essential for success. A trading plan helps you set clear goals, define your strategy, and stick to a disciplined approach, even in the face of volatile markets. But sticking to a trading plan is easier said than done, especially when emotions are running high. So how do you stay disciplined and focused in the midst of all the chaos? One technique is to set clear rules for yourself and stick to them, such as only taking trades that meet specific criteria or limiting the amount of capital you're willing to risk on any single trade. Another technique is to practice good self-care habits, such as getting enough sleep, exercise, and healthy food. By taking care of yourself, you'll be better equipped to handle the stresses of trading and make more rational decisions. Let's say you're in the midst of a volatile market, and prices are fluctuating wildly. You're starting to feel the pull of FOMO, fear of missing out, and are tempted to jump into a trade without proper analysis. This is where your trading plan can come in handy. Stick to your criteria for entry and exit points, and avoid getting caught up in the hype. Another example is when a trade is not going as planned, and you're tempted to hold on and hope that it will turn around. This is where discipline is crucial. Set clear stop-loss orders and stick to them, even if it means taking a loss. By doing so, you're protecting your capital and avoiding a potentially larger loss. And that's a wrap on our exploration of mastering trading psychology for crypto success. Remember, while the crypto market can be unpredictable and full of twists and turns, by taking care of your mindset, emotions, and discipline, you can make more informed decisions and increase your chances of success. Whether it's practicing mindfulness and visualization, journaling and self-reflection, or sticking to a well-thought-out trading plan, there are plenty of techniques and strategies you can use to master your trading psychology. So, go forth, traders, and conquer those markets with the power of your mind. And don't forget to subscribe to TechNation for more insights, tips, and witticisms on all things tech and crypto. Thanks for tuning in.